Hey there, folks. It's great to see you all again. Welcome back to the Entrepreneurial Edge, your go-to source for all things wealth building and financial freedom. This is the video where we dive into smart strategies to grow your wealth and achieve the financial independence you've always dreamed of. Today, we're diving deep into the world of dividend investing, with a special focus on the Charles Schwab SCHD ETF. Now, many of you are working hard, putting in long hours and trying to get ahead in your careers. You're tired of the rat race, dreaming of a day when you can live life on your own terms, free from financial stress. That's where dividend investing comes in. It's a strategy that can help you build a steady stream of passive income. It's a powerful approach for creating passive income streams and moving closer to financial independence. SCHD in particular has gained immense popularity among dividend investors. But why is that? Because it offers a compelling combination of reliable dividend income and the potential for capital appreciation over time. In this episode, we'll break down everything you need to know about SCHD, from its performance to its benefits. So grab your notepads, get ready to learn, and let's embark on this exciting journey toward financial freedom together. Stay tuned, and let's get started. Let's start by understanding what SCHD is all about. The Schwab U.S. Dividend Equity ETF, or SCHD for short, was launched in 2011. It's designed to track the performance of the Dow Jones U.S. Dividend 100 Index. Now, this index focuses on high-quality companies with a strong track record of paying dividends. We're talking about established businesses with solid financials and a history of sharing profits with their shareholders. But here's the best part. SCHD has a low expense ratio. That means more of your money stays invested and working for you. And historically, SCHD has delivered impressive returns, outperforming many of its peers in the dividend ETF space. Now let's talk about the exciting part, the dividend snowball effect. Imagine this, you invest in SCHD and it starts generating dividends. Instead of spending those dividends, you reinvest them back into SCHD. As you reinvest, you buy more shares of SCHD. And guess what? More shares mean more dividends. It's like a snowball rolling downhill, gathering more snow and momentum as it goes. Over time, this compounding effect can significantly amplify your returns. Your dividend income keeps growing and your investment portfolio snowballs in value. It's a powerful strategy for building long-term wealth. Reaching financial freedom. How much to invest in SCHD? Now, the million-dollar question: how much do you need to invest in SCHD to live off dividends? This is a crucial question for anyone aiming for financial independence. Well, let's do some math. It's not as daunting as it seems once you break it down. The average U.S. salary is around, let's say, $60,000 per year. This is a good benchmark to start with. Assuming SCHD yields a dividend of 4%, you would need $1.5 million invested to generate $60,000 in annual dividend income. This might sound like a huge amount, but it's achievable with a solid plan. That might seem like a lot, but remember the power of compounding and consistent investing. Compounding can significantly boost your returns over time. Start small, stay disciplined, and let that dividend snowball work its magic. Even modest, regular investments can grow substantially. Over time, you'll be amazed at how quickly your investment portfolio can grow. Patience and persistence are key. Keep your eyes on the prize, and financial freedom can be within your reach. CHD, a reliable path to long-term wealth. This section is all about understanding how you can secure your financial future through smart, long-term investments. SCHD offers a compelling opportunity to generate passive income and build long-term wealth through dividend investing. Imagine receiving regular dividend payments that grow over time, contributing to your financial independence. It's a diversified ETF with a focus on high-quality, dividend-paying companies. This means your investments are spread across various sectors, reducing risk while maximizing potential returns. Remember, investing is a marathon, not a sprint. Patience and persistence are key to seeing substantial growth in your wealth over time. Don't get caught up in market timing or chasing quick profits. The market will have its ups and downs, but staying the course is crucial. Instead, focus on building a solid investment strategy and stay consistent with your contributions. Regularly adding to your investments, even in small amounts, can lead to significant growth over the years. And if you found this episode helpful, don't forget to hit that like button and subscribe to our channel for more insightful content on entrepreneurship and financial freedom. Your support helps us bring you more valuable information. Until next time, keep hustling and keep growing that wealth. Stay dedicated, stay informed, and watch your financial dreams become a reality.